the ins and outs of getting a mortgage and figuring out how that works can be scary and confusing sometimes. Stay tuned. We're going to talk about that today. Hi, I'm Sharon Rosa, and welcome back to my YouTube channel. When you have a minute, please subscribe at the bottom of the page. In this week's video, I want to talk about something that's pretty serious, particularly right now. You know, I have a lot of buyers that are nervous, as a lot of people are, not knowing what's going to happen with the economy. We're in a recession or going to be in a recession, depending on who you talk to. And all of those things have an impact on the real estate market. So in this week's video, I want to talk about that mortgage process. And hopefully with a little bit of understanding, it will be less scary when you go to talk to your lender and figure out how much you can afford, what you can buy, all that kind of thing. So first and foremost, for buyers, and even if you've purchased before, sometimes we forget these things. When you go to a lender, they're going to look at 5 things. 2 are pretty big. Your down payment, how much are you planning to put down on a house? And what's your income? They're going to look at your debt to income ratio. They also really want to see if you have good credit. Because they're giving you money, they want to make sure you're going to be able to pay it back. The other 2 things that they look at are your work history. Do you have a job that you've had for a while? Is it in a profession that is pretty stable? And so they are going to look at your work history, and they're also going to consider the type of loan you are trying to get. So in this video, we're going to talk about conventional loans and 30-year fixed. So one of the biggest things that buyers look at and think about is their down payment. And that's a smart thing to do. But you have to remember or make sure that when you are thinking about your down payment, you remember that you are going to have some closing costs too. So if you are going to put down for $40,000 or $60,000 on a $300,000 home, you have to remember that your closing costs are going to be somewhere, generally the average is between 3 to 6% of that cost of that house. So on a $300,000 home, your closing costs could be anywhere from $9,000 to $18,000. And your mortgage lender will give you a better number, a more specific number as you get closer to the process or closer to the closing, but also up front they should be able to give you an estimate of your closing costs. So don't forget that. So on a $300,000 home, if you are planning, if you come to me and say, well, I'm going to put 20% down, I'm going to put $60,000 down, I'm going to say to you, do you have money for the closing costs above and beyond that 60? Because if you don't, you might want to sock away 12 of that, you know, just to kind of be right in the middle there, 12 of that for closing costs. So now you're looking at having less than the 20% down payment, which is not horrible. If you end up with about 16% at about $48,000 in a down payment, that's not bad. I know I'm throwing a lot of numbers at you, so let me just back that up a little bit. What I just talked about is the first thing that a lot of people think about is how much money do I have for the closing costs and for my down payment. Your real estate agent can kind of talk you through that like I just did. On a $300,000 home, if you want to put 20% down, you're going to need that $60,000. So if you definitely want to put 20 down, then you're going to have to come up with your closing cost money from somewhere else. Otherwise, you're going to have to take away from that $60,000 and put somewhere between 3 to 6% aside for your closing costs. And that's going to drop down your down payment amount. So what does that mean then in your payments? So when somebody's looking to buy a house, a lot of times they want to put 20% down because lenders like that. You'll get a lower percentage if you put a higher amount down and you're trying to bring down the costs of your monthly payments. So what does that look like? So now let's look at if you put 20% down on a $300,000 home, if you put 15% down, 10% down, or 5% down. And what does that mean in your monthly payments. Because those are the two things you're looking at as a buyer. How much can I put down to start, and how much is it going to cost me as I live in this house in the future? So you can go on to a Bankrate or any of the mortgage lender companies that have online estimates, and you can plug in this information. But what you're going to see is it'll tell you what your total would be, and some ones that are a little bit, more advanced, I guess, they'll have your P&I, which is your principal and interest, how much you're going to pay toward paying off that house. Then in some places, you will also see what your homeowners is going to be and what your taxes might be, because it'll ask you what zip code you're buying in. So those are going to be variables, and you have to understand that anything is giving you an estimate. There are a lot of variables when lenders break it down to what your payment's actually going to be per month, and if you're going to have to pay PMI and all that kind of stuff. So understand that these are all just estimates. But on a $300,000 home, if you are able to put 20% down, which will be $60,000, if you're able to put that amount down, you are going to pay principal and interest, taxes, and homeowners insurance approximately $1,828. If you put 15% down, your payment will go up to $1,926. If you are putting 10% down, you are looking at about a $2,024 payment, and then for 5%, it's $2,121. Now, if you look at those numbers that I have up there on the screen, and you look at the difference, you're only looking per month at a $97 or $98 difference, so about a $100 difference. So that's something to keep in mind if you start to panic because you originally thought you wanted to put 20% down and forgot about closing costs, and now realize you can only put 15% down. It's not the end of the world. In your monthly payment, it's going to be about $100. Now, this calculation, these numbers that I figured, as you can see on the screen, is if you're looking at a 6.8% interest rate. If that interest rate goes down, you'll pay less per month. If that interest rate goes up, you're going to pay more per month. So the predictions are that the interest rates are going to continue to go up. They've gone up all year, and they're going to go up over 7 before the end of the year. I don't know how much. Nobody can say for sure, but they will more than likely be over 7% very shortly. So let's take a look at these same numbers. A $300,000 house, putting down 20, 15, 10, or 5%, but at a 7.2% interest rate. So looking at that, you'll see that at 20% down, your payment, and again, this is P&I plus your homeowners plus taxes, and again, those will vary depending on your zip code, so your taxes are going to vary, but $1,893 at 20% down, $1,994 at 15% down, $2,096 at 10% down, and $2,198 at 5% down. So in both cases, obviously, the less money you put down, your payments are going to be higher per month. But again, so if you realize that you don't have the 20%, even at 7.2, and yes, the numbers are going up, you're still looking at about $100. This is $101 or $102 difference. So it's $5 or so more than it was at a 6.8% interest rate. But it's still not a huge difference in your monthly payment. Now, if you look at amortized over the life of this loan, that is going to add up. That's why people refinance. But that's a whole other video that we'll talk about. So, first and foremost, that should give you an idea. Hopefully that gives you an idea of, as the interest rates start to creep up, what happens to your payments. And that the percent you put down is not impacted significantly from month to month. So you will notice, however, that from a 6.8 interest rate on a $300,000 home to a 7.2 interest rate on a $300,000 home, your monthly payments will go up because the interest rate has gone up. The comparison, if you put 5% down in either case, right, whichever interest rate, 5% down, it increases $77 a month. If you put 10% down, it increases about $72 a month. If you put 15% down, it increases $68 a month. If you put 20% down, it increases $65 a month. So again, not huge increases over the life of the loan, yes, but you can always refinance, do the rates now because they're probably going to continue to go up over the next year or so. So of course they're going to be lower now than in a year or so. What you can do is watch the interest rates over the next 3 or 4 years. And at some point, if they drop back down, then you can refinance and then, get that lower payment. And you don't have to worry about, yes, for over this 30-year plan, this is how much more I'm paying. That gets a little more complicated when you look at how it's amortized over time. But just for the basics, right now, when you're buying a home, yes, the interest rates are going up. And yes, it does matter how much you put down. But it might not be as big of an impact as you in your head thought it was going to be. So you're talking about $100 approximately based off of the interest rates and based off of what percentage you put down. So hopefully that clears it up a little bit. If you have questions about it, when I'm working with my buyers, I will help them through this process. I will also refer them to their lender, whoever they have decided to work with, and your lender should be able to answer these questions and run the numbers for you in a couple of different ways so that you feel more comfortable. I guess the reason I decided to put this video out now is because there is a lot of anxiety with what's going to happen, but people still need to buy houses and people still need to sell their houses. So if I can simplify it and break it down to a way that's easier to understand, and so that you can see that the numbers aren't, thousands of dollars in difference a month, maybe you can feel less stressed about it. So even though I threw a lot of numbers at you, absolutely send me an email at SharonRosa@kw.com. If you have any questions, I'd be happy to help you. You can always visit my website at thebergliving.com. My phone number's on there as well, so you can give me a call or shoot me a text. If you have questions about mortgage, what should I do for my down payment? Does it make that much difference if I do 15, 20, 10%, whatever? If I don't have that much, is 5% okay right now? Any of those type of questions, definitely reach out to me. I hope you have a wonderful week. If you're getting ready to buy a house, don't panic. We can get you through the process. Hope you have a great week. I will see you here next Friday. Thanks.